Okay, folks, Thursday the 19th, and we are under pressure across the board. So, earnings yesterday coming out on Target and Walmart down quite a bit. Walmart down about 15% on the week. And, consumer discretionary really taking a wallop over these last 2 weeks. And, a lot of news agencies saying we're down here on inflation fears, and sure, I think we're down here on generally pricing in of the rest of the interest rate hikes for the rest of the year. The general unlocking of Beijing and Shanghai from their COVID lockdowns, thin gruel for the buyers here. So that unlocking is going to start tomorrow and the day after, with a lot of companies set to go back to work as well there in Asia. But several things to blame for the downside. Generally, just a bit of capitulation here, and we've had a healthy chat this morning about how to manage your P&L, if you are working these trades. But for me, it's been a sort of a long on the bond situation, bit of traditional sort of trading, short equities, long bonds, gold also. I think gold is now going to start to go back to its roots and be that sort of risk off asset, trading 1812s on the market right now. The dollar finding it hard to continue with retracing its lows on the week. So look, let's get over to these charts and have a bit of a gander. So where will we look to first? Well, let's look to first up the bund here on the daily chart. Now, these are the daily bars. If we go out to what are monthly bars on here, you can see that we have this uptrend from the lows of December 2016, February 2018, and we've come in to test on that area there this week. And then if we zoom back into, well, we slowly go down to like a weekly. You can see that last week, we had a lovely bid up out of here, and that those bids, any offers being rebought, so any selling being rebought here this week, and I am on this for certainly to the gap fill above, and hopefully higher. And then if we go down to the daily chart, you'll see that we are generally trying to put in a bit of a floor here, above the 151.67. So in order to get on that trade, and this is something that we do on the elite team here and with the mentees, is really cover how to kind of find what's going on in terms of value in this area. This is the value in this area. It's also a historical value sort of area here, and I've just charted that to really have a good spot to get long yesterday, and then operate myself within this area looking for the breakout. And so fine, we've gotten that, and so will we hold now? We've broken out of this area. Will we hold? That's the big question, I'm certainly not going to be holding this trade on any trade below 152.65s. But this is just generally for me a sign of what's happening in the risk appetite across the markets. We look at bonds, we look at gold, we look at VIX. Okay, when we want to figure what's going on under the hood, what are traders doing? Are they buying volatility? Are they selling volatility? Are they, we increased buying on puts or buying on calls? That's what the VIX is for. And then generally the bonds market to see, what's the yield doing? Where are people placing their money? Is it in risk on or risk off? So and in this case, it's very much risk off. So risk is off the table. So getting out of equities into bonds. So we're looking at the bund for that. For the US session, we can look at the T notes. Similar structure on the weekly chart here. We don't have a trend. I'm not loading enough days on this chart to probably as many as I am on the bund. So we'll probably fix that now. While we're talking, that chart can reload. So generally, this is what I'm seeing. There's a bit of a flight to the safety here in the bonds, and certainly you're seeing that downside coming in this morning. For example, here while we load this chart here on the Dow, just resistant on that 31,495s. Down we go. Now this channel in green that you can see here, right? We're gonna look at that in a second once I finish talking about T notes, but essentially, while we're doing that, we can look at gold here as well. Okay, here's Tino's loading. Quite a few more days for us. And you'll see here is the trend on T-notes coming into play right now. So, we'll just make that a big old thick line there. That's actually going back to the lows. I'll take my mug off the screen. It's going back to the lows here on the 3rd of September 2013, then the lows of October 2018, and then it's kind of come into play over the last kind of couple of weeks here, really month and a half by the looks of it. So similar structure to the Dow. Going to look on this on the daily. Are the buyers coming in now in this general area? To lift up? I think they are. And as you can see from where we are positioned in the bonds, yeah, I think we've got a lot more way to go. And with a lot more upside on bonds, I think we have a lot more downside to look at on equities. So we will say goodbye to the DAX and we'll look at the NASDAQ, currently down 1.4% at market here. As you can see, we'll pull it up here on the daily bars. And so we are now kind of down through the lows here from November 2020. And it doesn't look like it's a likely place for us to stop. Invariably, I think a likely place for us to stop is the 200 weekly moving average down here, 106.91s. That looks like a bit more decent value for me. Now I have across all the equities, I have these linear regression up channels on here. This is kind of generally the normal trend up curve, and as you can see, in March 2020, May 2020, bit of that Fed money. Well, a lot of that Fed money then screaming us into the all-time highs that we have on equities here. But really, with credit now in the US at all-time highs, so that means basically there's I don't know, we're at an all-time high of people living off of credit cards and leveraged loans and whatnot. On a personal level, it's starting to really break down a bit here. The rosy picture is starting to break down. So all that Fed, basically what I'm saying by talking about the consumer credit being at all-time highs is, you remember all that government money that we got through COVID in the US and Europe, UK? Well, guess what? It's all gone. Where was it spent? It was spent on NFTs of Chihuahua dogs and rocks. NFTs of rocks. It's all spent. And guess who has that money now? The brokers have that money now. All right. So if I come back in a second life, I will be a broker and have my own brokerage firm. That is one thing for sure. But yeah, so it's all gone. People back living off of credit now, all-time highs. I think the other dangerous thing about that is, essentially, it's all grand living on credit, but what's the one thing you don't want to do when you have large loans, large credit card bills? Well, you think about the interest rate. Well, guess what? Jay Powell and the boys and girls are raising the interest rates on those credit cards. I was talking to one hedge fund manager yesterday in Ireland. He was saying one bank has already, in Europe, gone ahead, actually in Ireland, I won't name the bank, has already gone ahead and raised their interest rates 1.5% already. The ECB hasn't even started with their cycle, and they're pegged to raise at a 25 basis point hike in July. But you have banks now already raising the interest rates themselves, aligning up with the US, no doubt, rather than a slower Europe and a more cautious Europe. There are reasons why the ECB is taking a bit more cautious. Obviously, we have a war on our borders in the Ukraine. So, a different thing there. But we're getting away from the point. The point is here, I think the capitulation is only getting started, actually. It's only getting started. because this whole credit story, I think, is going to gather some legs, especially as we come into the next cycle in June. So, just watch out on this. I think, we're getting into deep value down here. Well, yeah, I mean, I don't know if anyone wants me to talk about these figures, but 10,631 quarter, and that's going to be the low of September 2020. And who would have thought it could happen? Well, a lot of people, Michael Burry, I'd say, is definitely one of them. All right, that's the Nasdaq horror show, the SPOOS horror show. Well, a little more structure on the SPOOS market here that we've been leaning against. Linear regression channels here, of course, kind of showing normalized up curve, a general upward curve put in since 2020 here. COVID sell off 2020, but actually we had that going back to Volmageddon of 2018 here. It kind of brought us into this kind of regression curve up, and you can kind of start to make out how this generally is the upward curve on these markets, and we are about to fall out of that. Right, this morning we are putting pressure back down. I have shown you this low from Thursday last week, and we are now going to put pressure on that in today's trade. So break on this. I would not trade on these linear regression channels. It's simply just sort of a weather vane for us to see where we're at. I think target down on this market is 3809 quarters on the SPOOs. That is going to be the low of the 25th of March 2021. And actually, I think below that, we are into some serious trouble looking at 3614s for supports thereafter. So just something to note yesterday, getting right up close to that 20 EMA curve and then selling back down off it. And, look what happened the last time we were at that 20 EMA curve. We started selling down again. And when we couldn't hold above it back here in 21st of April, that commenced to sell down really. So might actually put on the 50 EMA here as well, just to kind of that's the SMA, here's the EMA there. So yeah, getting the big crossover on the 20 crossing down below the 50 here. Anyway, don't want to get on this too much, but further downside to be priced in here. Yeah, we've had a great sell down this morning, but I think it's got a bit further to go. So also covering on the Dow, finish off on US equities. We have this regression curve up here, so it's kind of the highs Jan 2018 to the lows of Feb 2018. Volmageddon kind of got this general attitude of growth here that we kind of, on Fed money came up out of there to just put in these frothy new highs. Well, we're kind of coming back to normalized growth here. I think weekly bars, I think looking at this, yeah, again, 200 weekly moving average should come into play here over the next month. And, coming into more rate hike cycles by then, more rate hike in 50 basis points. And then we can look at kind of getting a little bit more support in this market. But yeah, really, I don't see too much support coming in here at this time on any of these markets. All right, oil. Yeah, it's just on oil. DOE coming in yesterday. I think we had. Actually, I'm not going to peg myself here to calling up the figures. Hold on, let me just pull them up here. What did we get on DOE yesterday? We got headline figure of draw of 3.394, which was just a bit more of a draw than we got on APIs, negative 2.65 or something thereabouts. So the bids did come in, driving us back to 110.72s here, and then nice area to get on the shorts and then drive this down to 106.65's target here. So some good stuff going on. I'm going to leave that on for now, just turn that gray for the rest of this. So I think while we're pulling back here, I think this is just healthy stuff. I know that's kind of easy for me to say, but we're in this kind of line in the sand. Here's the analysis from my daily bar charts here. So I think if we give up supports 105.51s, I actually think it's back to 101.35s for this market. So equities are dragging on this. I did think we could hold this general higher notch here, this higher step, but yesterday's DOE just not able to get us there. So breakdown here on the morning trend. A lot of morning trends coming into play this week, to be honest. Really, really fluid breaks to the downside. You see that across all these equities here, um, just like this. So really nice stuff. All right, what else are we looking at? Yeah, I mean, look, there's gold now getting a nice bid. We were looking at long 1809 spot threes this morning, and those buyers are in. So I think I'm open to buying pullbacks on gold for that risk off trade and getting up into what could be a nice new high on gold now over the coming week or two. Just looking at gold on these daily or weekly bars here. The floor there, 1788. Nice area to look for the longs. I think in gold we are in a massive, massive bull flag. And with a bull flag, one of the characteristics for the breakout to the upside that I've noticed over my career is that prior to the breakout on the upside, you will see the ranging. It goes kind of side to side, right? Like this. One of the characteristics for the breakout on the upside in this case would be that we stop mid-channel and start to trade up. And then when we trade here, I'd be looking at breakout over a 1 or 2 days period, maybe a weekly, 2-week period to then get the breakout for the upside. That's my hypo on gold. Obviously, that's going to take a while to play out, but looking for longs today for a bit of that to continue. Certainly to get up to 1849's line in the sand, and then we'll be playing for the break above. So that's kind of a good trip from me around the markets. Not much more to add. Listen, watch out for yourselves there trying to buy the dip on these markets because this is not the bottom right now. So, yeah, take care. If you want to really study these markets and trade these markets better, please do join us in the Discord room. Link is in the description below. And yeah, apart from that, I'll talk to you tomorrow. Cheers.